what is tax deductible and what isn't. You're allowed to reduce your business's taxable income by expenses that you paid for that are ordinary and necessary to conduct your business and generate revenue. An ordinary expense is one that is common and accepted in your trade or business, and a necessary expense is helpful and appropriate for your trade or business. Expenses on your profit and loss statement, like cost of goods sold or overhead expenses, will be your most beneficial tax deductions because you can use the entire cost to reduce your taxable income, which is then applied to your tax rate to determine the amount owed. These expenses include rent, payroll, software, cell phone, travel, legal and professional fees, office expenses, postage, delivery, purchases of items sold. Some expenses may or may not show up on the profit and loss that are at least partially deductible. These are things like gifts, meals and entertainment, auto expenses, business use of home, and retirement savings. Items that are never tax deductible include entertainment, membership fees for social clubs, contributions to political parties and candidates, penalties and fines, and personal expenses. They're never tax deductible ever. Remember that the expense has to be ordinary and necessary for your business. So while a uniform expense might not be deductible for an accountant who can wear the same shirt and tie to church or a wedding, if you're a security guard who runs their own business, your uniform with the company's logo embroidered on it would be a tax-deductible business expense. Also remember that the goal is usually to pay in as little taxes as possible, which means spending as much money as possible. But remember that your tax savings are not one for one. If you spend $1,000, you likely only get tax savings of about $200, maybe $250. So the goal should never be to reduce your tax balance to zero because you'll have spent so much money that you won't have any money left over to pay for business expenses that are due next month. And lastly, if you're self-employed and you're trying to obtain financing either for the business or for yourself, for a home or a car, the bank will want to see your adjusted gross income on Form 1040 of your individual income tax return. So make sure you're showing a profit that demonstrates to the bank that you can generate income and pay the debt you're seeking. If the bank sees that you've driven your income so low that you owe little to no taxes, regardless of the legitimacy of the tax filing and the numbers you put on your return, they're not going to want to lend to you because it looks like you have no cash left over to pay for your expenses and your debts. So walk that line of tax deductions versus borrowing power in the future very carefully. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.